Welcome everybody, Market Sniper in the house, your precious metals turbocharging moments. I'm glad to have community members in the stream as well. Yep. We did a live stream yesterday. Well, we actually did a chat with Danny of Capital Cosm. We've done a personal community-based opportunity that was just for community members on our internal share through the Sniper Circle, which said opportunity to pick up leverage trades that have worked very well. Thank you very much. Thanks to, again, HVF method and technical analysis. This is handled best by showing you the charts. So let's show you what we did inside the community, how you too could be turbo accelerating your stack. By the way, this just goes up. By the way. It went up a few $100. That's right. Now $53 plus per ounce in a bar such as this. And that's a great improvement from, I think, the 47s it was at. So it's probably moved $600. Very good. I would like to see you turbocharging your stack. This is how we counteract the great debasement trade, the great debasement of fiat and debt instruments, which is just delayed fiat with an interest agreement attached to it. That's all debt markets are. It's fiat of the future, really, in essence. So let's go to the charts and let's share. And let's talk about what it is we've been doing inside the community and how the trades are going, and also show you that we actually trade. We really trade. So a couple of things. Gold. We were saying inside the community, and then later we repeated it once it had already moved a little bit for Danny of Capital Cosm. Also check out the YouTube release there. And of course on our own channel, remember to subscribe. We're almost 100,000. We'd love to have you carry us over the line, by the way. Share it with friends. You need friends that will be surviving. It's a few less zombies that will be coming banging on your door and more people that will be in a position to help themselves. That's what you need. And we will be updating and telling everybody about the great precious metals run. This one actually is useful because it kind of shows a trade entry that I did that I actually gave to the community with actual levels. Now, we're non-advisory, by the way, but our community owns their own outcomes and understands why we say something. So we've been talking about precious metals. Let's just go up a time frame and see the slam down that occurred on gold and just recap it very quickly for those that are first timers and new. Neckline over there, M top for gold. First hard hit was a warning. You rallied back, failed to make a new high, really hard hit again. Triggering events there, double top, target made on a wick low there. This, of course, was an inverted HVF. In the left shoulder, we drew that. It provided a funnel and gave us a level. You then got within that, the W bottom to a neckline over here, and that neckline was very close to that target of the double top. You see that? It's called confluencing of levels. Confluencing of levels. Very unique too, and we always prioritize targets, price points, round numbers, logical round numbers, key levels of significance. Just run is one of our favorite rules, and it typically plays out. And of course, this double bottom, we ended up giving it a dotted neckline. We gave it the 4045. So it's very close to that target, a little bit higher. And you'll see that amplitude created, and that gave you the W bottom target, which is where we are now. So I wouldn't whale in with leverage at this very juncture because you have met two interesting levels. You've met the round number of 4,200. Please let us show the 4,200 there. The 4,200, which was the neckline of the double top that actually broke down. That was a bearish pattern that broke down. And that has kind of said, you've done a lot on gold. We're going to have a bit of a rest. And so it was. And down you came. You've had a number of waves of selling. And it is doing, we're getting the gold versus the SPY popping. These moves are nice and high momentum. So the key thing we were highlighting to the community is very, very, very interesting and a little bit of almost free theory for you. You won't appreciate it until you've seen us do the study and the case studies and all the theory that we draw up for you. But essentially, often in head and shoulders, you do get what's called an M head. That is a complexity where it dips in the head on the top, and on the inverted head of the shoulder, you get a little rise. So that M that M there often splits the whole thing in half. And the key part is the volatility is very high on the left half, and it starts to dissipate if you are basing on the right half. So this left buttock, as I like to call it, of a bottom, if we're calling bottoms, fat bottom girls make the rocking world go round, said Queen. Let's say it's a girl. I just prefer it that way as a heterosexual. A nice sparky, slightly spiky, high volatility left glute to our lovely lady, and a more rounded bottom on the right glute, which shows a reduction of the volatility. That means a calming in the market. We still had to be careful because it could have continued downside for a further break. It could have continued downside for a further break, but we did notice squeezy Japanesey, you had the Friday run on the non-farm payroll number. Government shut down, remember all that? Little bit of a test move. It came up to our neckline and resisted and went really low vol and then broke subsequently in the new week. That was a key triggering event for this little fractal to break to the upside. That's right. And we drew the upside HVF for that, which we'll quite happily show you again on all of this. That was also a break of the W bottom and was setting you to run to our neckline that we chose for this pattern. Isn't it amazing that you get an inverted HVF up, down, really spiky, high volatility on the downside? You got an inverted HVF left shoulder. You get a perfectly symmetrically W bottom for the head of your inverted head and shoulder potential, which we divide in two, with the volatile half and the slightly more calming half, rounded bottoms, more chill. That shows more dissipation of the frenetic energy being shaken out. Any weak hands that had got in on leverage. You had the key break there with the neckline on the W bottom, and it brings you up to the neckline of the potential inverted head and shoulder, where, of course, the inverted HVF represents the left shoulder, and this is your whole head all the way through to there, up to there. And we warned, and we said to the community, for those that missed the long over here, luckily I'd got long and already taken some profits up to here. We said, had you missed that trade, we may get a winding up structure. And as for the left side, so for the right side. An inverted HVF on left shoulders often leads to an upside one on the inverted head and shoulder on the right shoulder. And we suggested buy orders between the 490 to the 100, 110 for you. And you would have been filled there on that order. And that's where I was filled. And look how tight that stop is. It's at the relative low one. I was filled on that RL2. And overnight, I went to sleep. And happy days, good news. Your upside HVF is smashing the neckline, which actually suggests a target up here, which is up there, and there's the profit takes there, which will actually be a new all-time high for gold. How about that for technical trading and building your stack? Got a bunch full of cash thrown at me this morning. Thank you to the trading gods. That is just applying HVF method, the beautiful way that it dovetails with traditional technical analysis patterns, such as head and shoulders, and its perfect symmetry of downside inverted HVF and spiky left glute to more rounded glute, which actually had an upside HVF in it as well, which I've yet to draw. And the movement up to the neckline where it rest paused gave you a second opportunity to put leverage longs a little lower down and run them up. But why do you not chase now? You may get a little bit of reaction. You've broken really high vol. You've made this little guy's target, and you've made the neckline, which was a key level of significance, 4,200, and it's a round number. So the W bottoms target brought you up to here. The M reversal target had this as a neckline and the round number. 3 reasons why it's not the point to wail in with hyper leverage. Just knowing when not to go hard is useful. Knowing when you can and using limit orders that require a certain thing and secure you a very high risk reward. Let's remove all these lines a little bit and just discuss the potential risk reward here. What is the risk reward on this trade? He says while showing you all the levels. Let's put it on. Let's put it on. Where is it? Which one has the risk reward? I'm always like, where is that damn thing? Not the emoticons. Where is the damn risk rewards? There it is, up there. Use your eyes. Thank you very much. So that entry there, if brought up to the stop at the low 1 and taken to the target of a new all-time high, how much would you like that? We haven't got the stop in correctly. It's now disappeared. It went too far. Come on, give us it back. Okay, go away again, you punk. Dang computers, give us that. I didn't mean to move the stop that tight. The stop goes to where it is placed on the orange line. That's your risk reward, friends. That's your risk reward if successful. It hasn't happened yet. It's a 16.54. If you risked $1,000, you'd make 16.54 grand. That is, of these, you'll be buying 3 of these. 3 of these for risking $1,000. 3 of these. Weighs 100 ounces. Do your shoulder presses every morning. Put it by your phone while it's charging to microwave your brain a little bit less, and you'll be doing just dandy and fine. Not only will you be keeping healthy and fit, but you'll have big blocks to stack. Big blocks to stack. Maybe you'd like 3 of those for $1,000. Hey, that's the thing we aim to do. Help you build wealth, preserve wealth, and secure freedoms with optionality across multiple jurisdictions, many of them outside of the Western hegemony that is busy dying, for which gold is telling you. Okay, that's what we're about. So that was the trade. That was one of the entries after making trade entries from down here. There was an upside HVF here. Let's see those other levels. Let's talk about it. HVF method is unique to us. You can't get it anywhere else. If you're interested in utilizing this unbelievable tool, which actually comes with a tool once you've shown you've understood what you're doing, for all community members, that you will in fact be able to turbocharge your stacking in reset times. Let's get it up. Let's get it up. Let's get it up. Let's make it refresh me a little bit. It doesn't want to do anything. There we go. Let's get our indicator again. Let's see if it'll give us the option. And we'll draw that upside for you. Come on, come on, come on. It always does this to me, especially if you're live streaming. By the way, where are you checking in from? Tell us, what country are you checking in from? We'd love to know. And also, what do you think about the next upside move for the metals? We don't need the historical volatility. We want our draw tool. And there, finally, it comes now. Okay, there we go. So let's do this draw for you. And amazing, 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 as taken on the target. This upside HVF, let's draw it for you. That's it over there. Bomb, bomb, bomb. Turn, 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 turn. That one over there that you had gave the target of, yes, you guessed it, approaching very close to our chosen neckline, the key round number of 4135. So we said, okay, the HVF is giving that. You don't stop dead on the target. We've got our round number neckline. We'll sell at the neckline and we'll rebuy back, which we've done. There's the rebuy back. You can't see the sell. That's done with. It's closed, and you can see the rebuy back. Loss of 3,908, is it? Call it 3,400 there. And what is the return? Well, you saw the risk reward. It's a lot better. It's a lot better. 57 is what you get for risking 3.3. I've actually got 2 entries on that, so it will be very beneficial if it gets back up to there. So this is kind of what we do, guys. This is kind of what we do. Take what's on the table, get the move. It could get a little bit churny. Wait and see how it turns out. And then where will the limit orders for re-entering occur? You're in a bit of a situation here now because you're at the legacy neckline of the double top and you've made the W bottoms charge up. I'm going to make these dash lines solid. They turned out true necklines. They can stay hard, as can that one. They can stay hard. Those are true key levels that are showing performance. But what a lovely move. What a lovely move. Bang. You wake up to that, erectile projectile in the morning, morning glory. The missus is in trouble. There she bend over the stove. She might get a jolly old awakening. How's your auntie grab from the lusty testosterone morning that the gold market has given you? Yep, that's it. Oh, and let's have a look at silver, by the way. Not doing too bad back in the 53s. Oh, yes, indeed. Oh, yes, indeed. By the way, I'm looking at your chats as you're putting them in, and we'll check in with you. Put on the reading gogs. Better do that, otherwise I'll be, my eyes will go spinning. Glad to be checking in from Panama, Panama, Panama. That's right. Beautiful jungle in the background. Silver, yeah, unbelievable, says V-Searcher. Porto Vallarta, Mexico. High is moving higher. Should have bought more silver and gold coins before I left Canada. Scotland, Bonnie Scotland in the house. Yep. Glad to see you guys in there. So let's go to the silver market and talk about that B. Silver. How you doing? I'm doing grand. How you doing? So I'm going to take that draw off over there. Again, a similar type structure. We allowed the deeper shoulder for silver on account of the fact it tends to be a little more schizo than gold. That would be your right shoulder. In this sense, you have a more ordinary head on this one and a big shoulder. I wouldn't call them a W bottom, given that this is so much higher. By the way, that also met target. That was a head and shoulders, don't you forget. And that was the right shoulder over there. That's the neckline. Note how you paused at the neckline and got a dip wick over there. That's typical progress decay at 55.45. And now, so we've warned that don't whale into gold. You've just made a key level of significance, number of key levels there. And isn't it beautiful when you get the same confirmation across all the precious metals complex? You've just whaled your way through with a very nice upside move through the target of that very same 49.3 was our neckline, inverted head and shoulder. There is the geometry and there's the target. Beautiful trade made. And you'll note that that's closed. I have nothing on there. Banked the profit. Thank you very much. Thank you, Mr. Market. Will it go further and higher? I think so, yes. But will it go up at that rate without a pullback? I think probably not. You may well be getting opportunities again coming soon where it rests a little bit and comes back down, despite it trading at 53.6. By the way, how's that Bitcoin rotation trade? We all had the memers, the influencers telling us now gold is dead and all the money's going into Bitcoin. I wonder how that's panning out. And everybody's saying, yep, that's it. Here is how far silver is from its high since in the last 14 years. Its high of the last 14 years. In fact, it is the high of ever. You are 1.62%. 1.62% as of this minute from your all-time high. So much for that rotation trade. Everyone was supposed to be dumping their silver and buying NSA token. It seems China isn't. It seems Russia isn't. It seems all these hardcore push from Bitcoin. And boy, have we just been drowned in absolute Bitcoin. Must buy the NSA token. Absolute splimp from people that just spew fake narratives. But at the same time, by the way, you keep getting evidence of original gangster think spooks and insiders dumping Bitcoin en masse. Yep, the BTC ETF is probably going to be the exit liquidity for all the NSA insiders, the Mossad, the CIA, and everyone else they cared to tip off on the Ponzi that they inflated up to the 2.2, 2.3, whatever it is, market cap. Oh dear. But real people that want to hold their wealth, that would require a man and a gun to come and take off you, prefer the idea of silver and gold. And that's what you got. 1.62 from your high, from your all-time high. And may I remind everybody, just in case you're not bullish enough, silver, where this all stands. You are, of course, let's go, we'll let go of that particular broker and get the history one. You are, of course, in a macro breakout, friends. You are in a macro breakout. Yep, the same routine I have to do every single time I come here because we will have to remove the 49,81428, and I will draw it again for you. Let's tidy that chart up a tiny bit. This is a runaway break, friends. You don't know how well silver's going to be looking after you. This is a runaway break. Let's get the tool out again. Draw it at that low. HVF method gets you into trades before everyone else. Everyone else waiting for the cup and handle break. We were already long from the 30s saying this is a key breakout. I tweeted it out. I even shared it for free. Wasted on most people who don't understand what we are doing. That's why it's so valuable to understand HVF method and at least conceptually know why we are doing what we do. 81428, I believe, is the number. and we'll take it out of the equation, and we should get a draw. Remember, we've given you this as a target. In fact, it gives you the interim level where it's likely to rest on far bigger time frames. We're on the quarterly. 3 months is a quarter of a year. That's right. 3 months is a quarter of a year. So 49,81428. I believe I put that in correctly. Let's see if it will draw it. 49,81428. It should be done. Let's once again refresh. There's a little bit of refresher anxiety here on the good old trading view. It seems to really want to take me back every single time. So we have to refresh and go back and go back and back until it draws what I want it to draw. But don't worry, I'm determined. We will get there. We will show you why. And the next major run will be to the doorstep of 100K, in our opinion. That's right. The next major run to the doorstep of 100K, in our opinion. That is what's going to be happening. So again, we draw this for you and we go and put in our imperfection. As I've mentioned before and others have highlighted for me, is that the Hunt Brothers high of the 1980s actually did a trade that was in the $50. That's not being captured by most brokers during the Hunt squeeze. No relative, by the way, pure coincidence. But they were actually doing something, I think, for the good of the metals and highlighting the bad conduct of the bankers. We really seem to be having a slight problem. Why you will not draw for me? Never mind. Let's make double sure that high is 49,81428. And I did mark it as an imperfection. Sometimes you do this a couple of times before it actually logs and registers. And if I refresh it, it's probably going to take me back to some other chart again. Bit frustrating. Bear with us here. We really want to show you this. So why are we doing this? Come on, man. Just give me the draw I'm asking you for. Do the damn thing as I've asked for it to draw. We've been here twice now. It pisses me off no end that you have to do so many rinse repeats on TradingView before it'll actually acknowledge the new data. There we go. Final attempt at the draw. Otherwise, I'll just stick to the manual version. This is running to the doorstep of the 90s. That's what a key point about this is all about. And you could actually, within that, get a technical run of 100 and rejection. So we don't know if it's going to bulk at the 100, the 3 digits, or whether it'll pull back before. 49.81428. Shout it out with me. Let's see if it'll actually do what we're begging it to do and have been begging it to do for 3 instances now, and why it won't. It's a tiny bit of a frustration point for me. As you can see, sometimes it is just like that. Now go and lock on and refresh. If that won't do what I want it to do, I will draw it manually for you and show you. So we're seeming, we've done many videos with it before, but the 330, we should make sure that we are in logarithmic scale. The 330 and the 598 are big targets that we've called. And the run up to around the 90s, which is where the second interim is where you will look. You can see we're in a key break. We're in a key break as well. And this is a runaway move. This is going to accelerate very, very briskly. So I can't be more bullish than I am on silver. The only one I think that will, in the end of it all, have maybe outshot silver, and it may come a bit later in the run, is platinum. So we'll do a platinum check-in as well. You can see that we've done a lot of macro study here. Also beefing up. By the way, the rest that occurred, you may recall that there was a rest. Let's go down to monthly. All occurred as and when the platinum also made its target. So we had a pullback, which would have been great for everyone to get out. Platinum had made target on a major monthly setup. There were a lot of signs we would be going up very strongly at that point. You should not have been getting too aggressive at these points. What happens after a target? Progress, decay, and pullbacks. Gold pullback, silver pullback. You had opportunities to load up at 47 at an investment level. You're now already $6 into the money. with a trading 53.6. And that was very, very useful in terms of seeing how everything is rolling. We also did last time, I did a little update for you on Heckler, which I think is probably one of the cheapest miners out there, and we'll do another double take for you over here. How do you like that little mover? And we've warned that you've got an 84 target on this one, an $84 target on this one. I've gone and jumped into even some calls with long dated, given a little bit of that data and information to community members, but I don't recommend call trading for everybody if it's not something you've done before, but you need time to ensure things happen. 84.75. That is, by the way, so it's worth taking this off log scale and back down to reg. That's a heck of a call. You know, it looks nearby when you have it on log scale. So let's just be clear. $61 is where we all next rest. 84.75 is the target. That's your chart. This guy is going to melt faces. So are other miners too, by the way. I've just chosen this one in particular because I think it's probably one of the most undervalued. And I've jumped in with long dated January 28 calls for those that want a few details on out of the money options. I'm talking $20, $25. You buy these options out of the money. That's what I've been doing. It's not a recommendation. I discussed this in the community a little bit. I'm telling you a little bit here for free. Some of you might choose to do that. That's on you. But if silver goes to 330, as I expect it to do, by the way, even if it pauses at 100, these things turn into cash hemorrhaging kings. Cash hemorrhaging kings. Meanwhile, you'll have the likes of Palantir on probably about 500 times sales relative valuation. You might do very well with a Palantir short or put and a Heckler call as a nice little combination for the future. If you've got 3 years you're ready to have on time, you could hedge against a demand destroying event with one of the most fluffiest over. You could get in a better price than Burry himself did on the likes of Palantir. I think Oracle and its debt and all these cranky debt special purpose vehicles that have all gone into the AI. I think AI is going to be the WorldCom, like the undersea fiber laying for the interwebium of the dot-com boom. You're going to have people that got a little bit excited, a little bit over leveraged, and the immediate returns are not immediately there. It turns into utility, like electricity, like so many things we take for granted today that comes into the house. They don't earn extra normal returns anymore. The people who paid to lay that infrastructure often have a boom on the promise of tomorrow and then a somewhat of a bust, which would probably tie in with the dot-com boom and many other things. So that's possibly something you do. I like a long short to protect against eventualities, as behind being the gold long call and the oil short call. Many people still want to rush in and buy oil. It's so cheap relative to gold. It's so cheap. It can get cheaper. Hyper stagflation. Please understand. Hyper stagflation, guys. That's what we're talking about. Someone saying Oracle is first AI dominant to fall. Barclays downgrades its debt to sell. Interesting. Zero Hedge article is quoted there. Thank you for your comment. That was Herbal Nerdle. Enjoying the broth. Having broth and chatting with the PM YouTube community here on the Live the Market Sniper. Glad to be with you. Let's have a look at some of the other interesting things we want to show you. How many of you are here? 716. Thank you for hitting the like. We appreciate it. 200 have done so. You help fool the algorithm. It costs you nothing. We appreciate that. It makes us do more live streams. It makes us get more recognition. By the way, that is the debasement of your money in one chart. That is the corollary of the debasement of your money in one chart. I invert that scale. That is your dollar's buying power. It is called the man pees off the roof pattern, as I often like to say, in terms of convexity, or more popularly, the Ernest Hemingway bankruptcy curve, another phrase I've come up with, which represents slowly at first and then suddenly very fast. You are in the convexity phase of real recognition of fiat and debt debasement. That's where you are right now. That's in your gold chart. Everybody, you have lost a basis of account in terms of fiat monies. There's no valuation except a gold ounce valuation for anything, because that you can hold, that you can earn on, and that should be your benchmark as far as I'm concerned in terms of your net worth. You should all have things that you're monitoring in terms of gold ounces. The fiat markets cannot be trusted anymore. They are no longer suitable, reliable, or doing anything that truly manifests. The nominal normies are going to be excited by stock market go up, this go up, and they will be underperforming the degree to gold going up on a basis of they are nominally going up, but in gold ounces, they are actually rebasing downwards. You are actually getting the deflation of hyper-valued assets in gold ounces at the same time as your fiat is in a convexity collapse phase. This is hyper-stagflation. This is what we've been warning exactly about, which is what Jay Powell said in the last rate cut, where he said, well, rates might need to be lower still for the jobs market, but should be higher for the inflation. Well, they're nearly on 3% at the current moment. Inflation forces are going up as the dollar devalues. And what he's actually saying is he needs two monetary policies, one for the inflation, which should be higher, and one for stimulation, which is lower. Stagnation, inflation, stagnation and inflation, bad growth economy, problems in the housing market, lack of liquidity, lack of buyers, lack of affordability, a lack of affordability in the stock markets, actually all re-rating downwards right now as we speak in gold ounces. And at the same time, too much inflation in terms of his target, that is 2%, up from whatever it was before, 1 or 1.5, I can't even remember. All of this is happening. Hyper stagflation is happening. And tariffs are how he starts to tax you by sleight of hand. There's taxation going all around the West. We showed a couple of our core memes. No, let's go with that one. A controlled demolition occurs when parasites hijack a thriving financial system, which was America post World War II, made a lot of things productive, strong nation, via insider control, extracting maximum personal gain at sustainability expense. Nothing better than Pelosi, who just finished her career and has a 17,000% exceeding Dow performance. What an unbelievable hedge fund manager she turned out to be, far better than Warren Buffett in terms of picking. Of course, they're front-running contract awards by the US government. All those companies that they're about to whale a lot of government cheap funds to, with all the associated backhanders to all the intermediary companies in between that are designed to enrich politicians at the cost of the citizenry by diluting the fund and overexpending. But anyway, back to the definition of a controlled demolition. It occurs when parasites hijack a thriving financial system via their insider control, at sustainability's expense. These are generally actions of willful intent. They're not incompetence. It is willful intent to self-enrich, often framed as incompetence. It's not incompetence. Shielded by captured politicians, regulators, and media. They fraudulently enrich themselves as genius speculators, ensuring the collapse of the system itself. A network cabal strips assets to the bone in a final destructive heist, dumping the systemic costs onto the masses of the system failure. That is a controlled demolition. That is what you are experiencing right now in the United States of America, the cacocracy, and the Western world as well. Let's not leave Germany out there and the decisions they've made. And what goes with it is tax scavenge mode, which when governments that have been covertly taxing you through inflation and excessive debt-based expenditure suddenly revert to totalitarian new direct taxation initiatives and cuts to existing services and social contracts. Once the ability to borrow has become too expensive or untenable. That's what's going on in Europe too, and Britain. That's why you're hearing about, hey, there's going to be an exit tax. If you leave the country, we'll take 20% of your assets. So you sell your house, your cars and everything, and you move somewhere else outside of the West, and they get wind of that. They think they get to give you a haircut that takes 20% of your assets in total as an exit cost. That's what they're thinking of. Why? Because they can't borrow in the markets anymore and pass the silent, sneaky tax of over-proliferation and inflation and dilution on you anymore. They have to come directly for your wealth, which is why you could end up being that corpse. Don't be the corpse. Protect yourself from this activity. You need precious metals to do that. And you also need a footprint outside of the Western nations that are going into tax scavenge mode. Tariffs is part thereof. In the name of making US stronger and putting the finger up to the enemies, it's absolutely pointless. It's none of those things. It's just taxing citizens in America for any aspect of or component therein that is imported. So you pay more for not buying 100% every aspect of the product being locally made. In the name of, we're going to reshore production. Good luck with reshoring rare earth minerals production when you don't have the power even to power all those data centers, and you're passing all the cost for those data centers and the utility and the increase in bills onto your local citizens that can't afford their electricity anymore because you've decided AI must be there to tell them what time of day it is and why everything's got expensive. And you can spin it as the Ministry of Truth and suppress history because the all-knowing Grok or the ChatGPT will tell you what you need to know or what you should know according to them. That's it. And you're paying for that funding every time they put one of those centers in your state. That's right. Your utility costs go up. Your water costs go up. A whole lot of things go up. So that's gold that we're talking about. Now, I forgot what we were coming here for. And now I remember we were going to divide it by the US WTI and just say to you, don't be sucked in. Don't be sucked in. US oil, let's rather call it. Don't be sucked in by those trying to get you to jump out and stay. Stay with the macro trade. This is a monetary-based collapse. Monetary-based collapse. That's right. And you want to be in the monetary metals, the real monetary metals. You don't want to run into the Rockefeller tax accounts. That is a reversal, a major reversal. That was called here long before anyone else, by the way. Long before anyone else, we called this, and we will be sharing some of our trade history. You can go and see it on our case studies on themarketsniper.com, which is also where you can book a call if you want to find out more. That was it. And we warned you're going to go up, 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 and gold is going to hyper dominate oil. And you can see right here that it is resuming after that gold pullback. And you will make a higher high on this. This is a secular reversal. It is a full-blown reversal. People will want to call tops on this, and they will call too soon. Yes, eventually, once all fiat is quite clearly being understood and is in a devaluation that is known and understood and accepted, the price of oil will eventually go up. It will be one of the last, however. It will be one of the last, and people will try pivot too soon. That's what happened last time when they wanted to pivot too soon, and that was the events of CV19, which we too also were responsible for calling. That's right, we called this same inverted head and shoulder way back then. That is your left, that is your head, and a nice big squeeze up. It was actually beautiful setup. That was the precursor. And something else that you should bear in mind, it was associated with repo problems in the interbanking plumbing. We've mentioned the basis trade on the Cayman Islands hedge fund game. That's right. A lot of fraud, and the Fed has been pumping in liquidity to support the repo markets. At the same time, Buffett is provided 380 billion plus on the money markets to earn an interest rate on the basis, and that is funding. Money markets lean on repo markets, and they utilize that for interbank lending that gets you the yield that you earn on the money markets that Warren is getting. That's right. And the Fed is keeping the repo markets afloat because people are doing 24-hour financing, leveraging up 100x to buy treasuries. Well, fancy that. Treasuries are a runaway parabola. You're going to have the likes of certain people that I won't name. They're going to tell you and make you pay for a very special, super clever document that they've written that will explain to you why stable coins are going to extend the US hegemony. No, no, no. Since 2013, 2012, the largest stable coin has bought up until present only 163 billion treasuries and is now doubling down on buying gold and is becoming a massive gold buyer. They are not going to buy the 600 billion that you just released in a single month. 600 billion. We're talking 0.6 of a trillion in a single month. You will be through 39 trillion before Christmas Day. Mark my words. And you'll be knocking on 40. You will cross into 40 trillion. 40 trillion debt in the US during the course of January and February of next year, which sounds a long way away. It isn't. It is only a certain number of shopping days, shoplifting days, let's say, to Christmas. And this is going to come hard and fast. The rate that is being added. And by the way, once you have government shutdown, the minute that ends, you have a super surge on all the back pay that needs doing, and that all goes onto the debt markets. There is an excess of debt. Debt is fiat. They've printed too much fiat. This is Weimar. Don't let anyone tell you gold bubble. Don't let anyone tell you silver bubble. Don't let anyone tell you platinum bubble or minor bubble. This is a fiat bubble, a fiat and debt bubble, which is just delayed fiat with a rental agreement associated, known as usury. That's all it is. That is all it is. There is an absolute dollar bubble in proliferation brought to you about by a nation that throws IOUs at everyone else who brings them goods. And nobody wants to receive that anymore. They don't want paper anymore. They need assets. There's a mass run for commodities by America, China, and everybody else. It's largely accepted China has cornered rare earth minerals, which is a large part of batteries, all sorts of power, weapons, and a lot of other things. Let's have a look at your comments. So this is twice we've made this call, and twice it's been correct, and targets are being made. Targets are being made, and note how much further you could go. The last COVID was, of course, an exception. I'm not saying you will have complete lockdown again, but you can't rule it out. This target was made long before anyone else was telling you, don't be buying the commodity only in oil story, buy the monetary commodities. This is a monetary phenomenon, and it has destroyed that. And it will have had, gas hasn't done particularly well either. You may not even know about silver yet, says somebody. Let's read the comment. Francis should have over 100K viewers of this video. Also, auto theft, be careful, says somebody else. Thank you for the shout out. We should have more. We appreciate that. Sharing is caring. Let's be clear, guys. You need as many people as possible to have saved themselves. You don't want to be the minority of one surrounded by neighbors that haven't, that are bust, because they'll come and beg off you. You want a community of guys at your level that have also saved their financial system, have also stacked long-term food, that also have Panamanian, outside, Georgian, other nations outside of the Western world, which is part of what we help and do. Once a community member with us, you get a free call with our resident expert on all things, and most of which we have implemented for ourselves and have great, reliable, and trustworthy partners at fair pricing that will advance you. As you are making your wealth grow through your silver and gold, you also have to do other planning. We had Lynette Zhang come down. This is someone who wants a plan C to a plan B up in the hills and in the rural areas of Arizona. She also wants something outside of the US. Other people are realizing it ain't going well. It isn't going well. It ends badly. The cost of living becomes crazy. Zombie apocalypse. Most people haven't prepared. Most people become a problem. You need to save your neighbors. You need a community of people who are awake. You need a community of people who are saved. You don't want to be gaslit by maskers, CV19 injectors, and other fools that vote left or right, blue or red on an ongoing basis, thinking their voice has been heard. My voice was heard. At least I voted. I've saved my right. You can't complain. You never squeaked your little X in a dumb box for whoever they told you they were selecting on the next cycle. It is not of any value. It is not none of those processes. It's mass psychosis. There is only one thing, and this is the theme of your life. You are going to witness economic history here, economic case study history. This is the largest coordinated collapse of a proliferator hegemony. Half of the planet, the Western world, is not coming out of this very well at all, and the hegemon falls from the highest ladder. Thank you for the super chat. We don't beg for these, but we appreciate people who voluntarily offer them. It is 90L Bradford. BTC, USD, and silver back to 470 units. Good point, and I'm giving you a like for that. He's highlighting the cross valuation of Bitcoin. Let's go and see. Silver is 1.6% down from its all-time high. Let's see how USD versus Bitcoin is from its high and how it looks. We warned inside the community as well that there could be a third selling leg on the BTC side and that it could stall any form. There was a bit of a flag over here. There was quite clearly a broadening structure over there, and you've had one clear wave selling, two, and you've now triggered there. Not so great for Bitcoin. We warned that the 100 would probably be temporary support. You'll bounce a little bit before falling through it. And the next level after the 100 is likely to be the 93. We're on a 4-hour there. We can go up to an 8 and get a bit more history. And then we'll also do the cross valuations that our super chat friend was talking about, for which we thank him for that. And we appreciate when people value the channel enough to do that. It's really welcome, and we thank all the supporters. And shares and likes, if you're not a bit tight, are currency to us as well. 93 is the next level. We've explained why 93 is huge. And then below 93 is 86. So there's another selling wave that could bring you maybe 93, that it gets support on Bitcoin. But let's also measure Bitcoin's performance from its all-time high, which was around the 126. I'm afraid to say that Bitcoin NSA token is down 19.76%, 20% down during this period. Bitcoin has been 20% down. Gold was never 20% down. Silver wasn't even 20% down. Platinum wasn't 20% down. And they were all back much closer to their highs than Bitcoin is. And Bitcoin is looking like it's getting that next wave of selling. Let's see if I can show that on our, I've got to be careful here. Yeah. I'll stay out of showing our community the sniper circle, where I showed our chart and our update from last night and this morning, suggesting a third wave of sell. You're not going to get your alt run yet until this guy finds some base. You still need Bitcoin to be relatively strong. I'm okay with it grinding to 150K and the max is getting stroppy if we get our alt run, but I think that comes a bit later. The key market mover at the moment is actually, you guessed it, precious metals. That's where my focus is, right back on the precious metals. I believe we are done with this correction, and we're showing real zeal for upside. The corrections will be shorter. I warned that in this situation, you're going to have far shorter corrections. By the way, this is Bitcoin divided by gold, and this was a key level we identified as a neckline, and you are spilling through it like a monster. That is puking. That is puking on the relative valuation chart. Sorry, my friends, on your NSA token. It is not doing anymore what you expect it to do relative to gold. These red lines are grind lines drawn from a long time ago. And you can see here that that is a bad, bad break. And you're making new lows where previously you had supported. Possible suggestion of a head and shoulder here. It's a little bit off, though. That armpit is tiny bit lower. You did a deeper dip, but this is the key level. I assessed 25.2. It's just run and supported there. And now you are selling off to the downside. Not going to show the gold BTC. Yes, I am showing it right now. So King Jesus paid for sins, spot price. We are showing it right now. So that's what you're seeing. A triggering event on a major support level. By the way, this was 40.7 ounces of gold that you needed for a single Bitcoin. Now it's down to 24.1. 24.1 versus 40.7. That's quite some re-rating, friends. That's quite some re-rating. Let's percentage that as well, just so that you can see the relative valuation adjustment. Don't forget, this too is also a log scale chart. That is a hard fall. 40.56 from Bitcoin's all-time relative high. Watching your chats, please post your comments. We love it. 40.5, going for 41% down in gold ounces from its high. Bitcoin, 41% down in gold ounces, by the way. They won't be posting that. Pompliano and all these other Maxi Schillers, Michael Saylor, Jack Maylers, all of these other people telling you it's the solves everything, Bitcoin fixes this, etc., etc. NSA token it is, and it is not outperforming against gold since the date of December 24. 24th of December was your final high point, and I would not be giving 24 ounces of my gold for a single Bitcoin either. Somebody was also asking for silver on that, so we'll do it as well. And silver is a more higher momentum version of gold, as you already know, and you can see that the sell-off is man peas off the roof, again, in a very, very bladder full kind of way, if you'll excuse the analogy. And yeah, that was also around about beginning of the year and the end of last year, your highs. You would have had, let's get a value for you, it would have taken so many ounces. What was the high? Let's get a click and see the high. Let's see it. I think it's over there. The high was 3,578 ounces. My goodness, I would not be giving you 3,000, nearly 3,600 ounces of my silver to get one Bitcoin. That is not a deal I would be making for all the tea in China thrown in as well. And you are now at 1893. So you're almost half. So the percentage loss against silver is even higher. I think you're going to go beyond 40, and you're not too far off making a 50 on this one, 47.08, illustrating that silver is really starting to get its running shoes on. And when you look at it on a 3 daily basis, we can also go a bigger time frame on all of this. This is a loss of value. That is your basing ascending grind line. That was your squeeze that bumped you up, and marginally higher highs. Marginally higher highs. The bent banana, a phrase that then became popularized by others that we were using. You can see this is a significant move up. That's a less significant one. And this is an even less significant one. And this is your diminishing return. And your basing ascending grind line that could have extended all the way from there is being broken right here in silver ounces. And you are losing. This is a spiller. This is an absolute thriller. Yeah, and not changing my silver ounces for Bitcoin. Not happening here. Thank you very much. So that was an interesting share coming from your comments surrounding about relative valuation. We've covered gold in oil ounces and asserted that you're in a major technical reversal. Gold is your new basis of account, friends. And silver is your alpha over gold. Miners will be your alpha over gold. That very few will give alpha over gold. Gold is your foundation, outperformer in the situation by holding steady value. Silver and platinum to outperform. Let's have a look at platinum. Did we do the platinum? I'm not sure we did. Let's do the update on platinum. Remember, you too can become part of our community, and we can discuss multiple opportunities during a macro bull run in silver and gold to turbocharge your stacking by making trading related profits with very tight risk. Did you notice how tight that squeeze and that reward was? What was it? Was it 19 or 15 or 16? I'm not even remembering what I landed. It's almost not important. Just make the profit, stack it. And I tax down from my orange pot, which is light leverage, but with tight opportunities on continuation, like we just described in the opening gambit of this video, to convert into, take that tax down from the trading accounts. Remember, there's long-term, there's still some counterparty risk, especially if you maybe have American or Western trading accounts. Tax down, turn into ounces, turbo stack. It's what we do. It's what we do. And the stack is held in non-governmental places, non-banker related, non-politically exposed people. So let's just have a look on the smaller time frame on platinum and bring you into where we were. This is also having a little bit of a wind up, very close to its target. Let's get that target again. What was the target? I'll do the draw one more time. I think it was 1640. This we provided to the precious metal community on this YouTube channel without charge. We were, of course, in it before within our community. I actually bought at 900s Yep. We got in at 900. 16.15 on this one. On the futures, you get a different price. Please bear in mind, it was a little bit higher than on the others. So this one is, you get various pricing depending on whether you're looking at the NYMEX futures. Your brokers will be dealing different levels. But that was real opportunity. We had a little flush out to the downside. So you can see 16.15. So if I drop back down to the daily, 16.15 is a number. It's still in the right place, thank goodness. And you made that. That was another reason why we said, listen, you can be in for a bit of a pause. But this overall structure is probably in the world of our 16.15, back up here, around about here. This whole structure is based around it, around that target being made. So you can see it there, nice, strong. You had a little bit of a falling wedge in here. We've discussed this as well before at a bodies level. And you popped out of the falling wedge with a little bit of a return move there. This too will run. I consider platinum cheap gold. It is really unique. Held those platinum maples in my hand that we accumulated on the last tax down for further stack. Beautiful things, beautiful things. They shine even more than the silver. They're nice and hard. They don't ever go fallow in any way. So awesome. Let's have a look at some of those questions. 807 of you with us. Gold is dominating. Gold. Gold is your basis of account. What is your net worth? Gold ounces will tell you. Gold ounces will tell you. Everything to be measured in gold ounces. Tax down into your stack, tax down into your silver, tax down into your platinum. That's what we do. Bitcoin network will survive the collapse of fiat, but I'm all in on silver now, says someone. Soon it will be 50 or 70 or 75% exit tax. Governments are going to go more totalitarian because they can't tax you by sleight of hand anymore. Too many people know, and they don't have the debt markets that will accept it to the same degree as before. This is why we said our 2020 technical call on the TLT, which is the long-based US debt ETF, which is basically saying debt markets were going to turn, is one of the most significant because they can't tax you by sleight of hand anymore. They have to be more direct and in your face about doing it. That's called tax scavenge mode. Those that hold gold and silver make all the rules. They will live like a king. Checking in from New Zealand. Glad to have you. Good game there by the Kiwis against the Irish. Some people sold their souls for wealth. Sniper, any thoughts on hyperinflation ahead? So inflation is propaganda. You're going to be fed lies on the true extent of inflation in the same way that we continued to make a big song and a dance about the labor numbers on the US economy being false, only for subsequent regular revisions, and now they've gone more recessionary vibe. You are caught between a blue and a red ping pong bat, much like the voting system as well, which is inflation focus and stagnation, recession focus. We've just had a long spell now of recessionary focus. It's getting tough for people, etc., etc., etc. But during that period, the next inflation cycle is already winding up. Alt holders get maximum pain. It's probably true in so far. I'd like to see a reciprocal interview, Market Sniper and Rick Rule. Rick's super smart, knows the metals markets well, and yeah, a solid and amusing guy. I think he's a bit more pro the energies. I am less so. I also don't think he has the same economic framing as me, as hyper stagflation, that you can mutually coexist in devaluing buying power of money at the same time as stagnating economy. And in fact, we have a two-tier legal system, two-tier media system, two-tier justice system, and two-tier financial system of insiders stripping. They're going to parabola their wealth with all the theft, corruption that they will do out of the debt. It's the end of times, so the rules go out the window. Everyone is stealing. Why be the one that doesn't? It's almost having morality is impossible once you're in that insider cartel, even if you're prone to do that. When you have that kind of environment, you get a lot of insider enrichment, and that cost is dissipated and spread like poison on the rest of everyone else. You are being taxed and you're devaluing fiat and the debt proliferation. And all the Ponzi's that they have built up with hedge fund managers having the primary dealers facilitate 24-hour repo financing for ridiculous leverage on a basis trade. Try get me. Try say, hey, I'm Francis Hunt. Can you primary dealers lend me 100 million? I want to go buy gold and silver ounces with that. I promise I'm good for it. You can have the collateral on the gold. Try get me 24-hour financing in the repo market that gets rolled automatically for me every day. See if that will work. See if that will work. If I'm not buying treasury, see how much those primary dealers will lend Francis Hunt 10 million. I won't even ask for billions like these guys are doing. I'll take 10 million and I'll roll it every day and I'll pay the repo interest rate. No worries. By the way, this move alone on gold will have paid all the interest of the last 6 months just in capital appreciation. Guess what? They won't be lending to me for that purpose, but they are lending to a whole bunch of their ex-CIA mates that so swan around the investment banking inner circles that are playing golf in the Cayman Islands and playing a very, very marginal trade and putting the entire system at risk, the repo system at risk, that the Fed is actually providing liquidity for the consequences that they are causing in the repo market. Too big to fail. Speculators being backed. It is bullshit. It is dishonest. It's a cacocracy. It's theft of new. It's proliferation against you. It is devaluation. It's your cost of living increase. It's your buying power reduced. And that is why we're here. I'm here to remind you that the criminals are criminal, and that you are the marks for exploitation, and that the only way you get around that is you do the things that we are discussing regularly on this channel. That is about saving your financial buying power, saving yourself from a predatory government that thinks it's its right is to know everything you own and is dropping a surveillance grid of complete monitoring and complete tokenization of every asset you own so that they can get on the clipboard who you are and what you're worth before stripping you of all of it. These are predators. These are people that want to take your life's work from you. You don't hate BlackRock enough. You don't hate State Street enough. You don't hate the primary dealers that are betting the entire sustainability of your financial system enough. You don't hate those hedge funds stuffed with CIA agents and legacy investment bankers that play golf enough, that are making profits that are privatized and losses that are socialized in your name at the expense of the sustainability of once was a very good system that has been loaded up with greed-based Talmudic parasites. That's where you are. You're fighting against. It's a spiritual war, it's a financial war, it's an economic war. You need more people that are your friends. You need more people around you that are taking action so that you can have a community of the willing, because the zombies that didn't take action will come. They will weaponize the great poor against you for protecting yourself. Just like they said, the unvaccinated didn't tell us hard enough. It's time to talk about why they never warned us enough. And before, they were saying how we should be denied medical services and left to die and not sent an ambulance. Those same people, that same weaponized media that crooked you, that made you the mark, that called you out as the sinner for not taking their poison, those same people will turn on you for surviving. They are the criminals. They are spiritually bereft. They're satanic. They're occultic. They're evil. Straight up, they're thieves. They're frauds. That's who they are. That's what you're dealing with right here, right now. Hear it from me. This is an everything war. Financial, economic, political, liberty, freedom, privacy, spirit, godliness, everything. This is an everything war. And you've got to take action. You've got to recognize it. You've got to jump on it. And you've got to get really well positioned. And with it, you need friends, you need allies. You won't always be strong all the time. Try stand guard 24 hours. A team stands guard an hour shift and does a better job over the village. It takes a village to bring up a child. That's why that saying comes, because it's the candlestick maker that pats his head and gives him a cookie. It's the brothers, the sisters, the cousins, the uncles, the neighbors that play football with him. Do not isolate yourself. Time now is to be bonding with like-minded. Put an end to the gaslighting. Talk freely. Be in like-minded company. This is what I'm telling you. Yep. So that's your stream from me today. 819 of you. We're going to finish back on the gold price and say, warning, it's not the time to wail in, but I will give you a practical possible option. that exists for what's happening here. You see, a little bit of rest now. It's turned into a shooting star. We started that stream. It was a green candle. There was nothing but up. You could have been tempted to whale in. We warned, don't do it. So a pullback is likely at this juncture on the basis of the king. The king is gold. You start your analysis on gold. You then move to silver and platinum and the others, because what gold does, the others will be affected by the law of correlation. The king stands up. Everybody stands up. The king sits down again for a bit at a key level of significance. The others will sit too. That's what you do. So you do your macro analysis. You need someone who understands these concepts, help hammer them into consistency, big time frame analysis, drop the time frame analysis, key levels of significance, patterns, and drops the law of round numbers. All of the laws keep showing you why you will rest here. Do not whale in. We started the stream telling you, do not whale in with leverage at this point and juncture. Limit orders are your friend. You may well get a pullback. There is a law that says sometimes when you have such a strong candle and you get a bit of a rest at a key level that you may get up to a 50% pullback. You may get I can't tell you. There's possibilities and probabilities, but the opportunity exists. If you could get a pullback part the way, you would potentially get very beneficial stops just below the 4135 that should not be run. That big melt up candle should not be taken back in full, because then maybe we're in a more reasonable or larger pullback. So how would you plan an order on limit to potentially trade up to the 4,397 that we're illustrating over here, which is part of this pattern that we've been talking about for a while with you? Well, let's go and have a look at it on the lower time frames and see what would another order be like. We've nailed it twice already, from here, down here, and up here as well with fills. So let's have a look. Let's drop to the hourly time frame and look at that interaction. By the way, this was such a beautiful little upside HVF. See that? See that squeezy? You could have had that low. The HVF tends to stand. So that could be a stop placement for you on that third low. That was the triggering event. Let's see how that draw worked on the lower time frame. So we're taking you into the lower time frame to do real technical analysis on a winding up upside HVF structure at a level we predicted before the market had even got there. Before this had even traded to 4135, we had drawn that line. Ask anyone from the community that is in here right now. This is called scenario casting with a bias to the future. Where are we likely to rest? Where can the pullback come? Let's put the draw tool on and let's show you where that target would have been for this small little fractal. This is the draw. This is how it looked. Did you get kettle drumsticks? Yes, you did. See that? Look at this. Beautiful. Kettle drumsticks defined by us. It kind of looks like a shooting star, kind of looks like a hammer with small bodies, funneling, squeezy, low volatility, key break over there, small structure. This was the best part of the move, making the target. You can see how it slowed from there. It was up nearly vertical from there. Perfect. So using the key levels of significance of the 1 hour upside HVF from the break of the 4135, what do we determine? Well, a pullback could come. It could come. You could see 4172 be a bit of support, the second interim. It's a much longer way to come down to the first interim. I wouldn't expect to see that big move being 100% retraced. That would be a bit more bearish. Maybe the 50% mark. So you could look at potentially as a limit, speculative limit order with real sizing and a stop. I would put the stop, I would optimize the stop. Technically, I don't think that gets run, but you could probably put the midpoint of our funnel or even the breakout candle. Such a good rip of a candle, that should not be taken back. So maybe you could speculate 50% of that candle. So let's get the half mark. Is a very good, would be a decent pullback and a great entry, I think. Quite possibly won't be met. Let's have a look at that candle. What was the open? What was the close? So the green body of the candle, just the body, not the wicks. 4136, call it 4137, and the close was 4181. So you're about 50, not quite 50, $45 in there. I would take $22 off the close, 22 off 6181. maybe 160, 159. So roughly where I drew it at the 160 would be a great limit order entry. You could put a box around that. You could maybe put one or two small size ones, some a little higher, some a little lower. So it would look something like that. Where would I put my stop? I'd put my stop technically trading there. I would wait for the move to come back. If it did come that far, you might be unlucky. It might support on the target and the second interim levels instead. If you see that then materializing and it starts to bounce back up and make a second impulse, then you want to drag that limit order up and try pick a low there. You might wind up and do another HVF. We're getting a lot of HVF structures. You might just do this at these levels. And guess what? You get a break in with a tight stop. You are in somewhere here, for example, buying the move up, and you hold all the way to the 4,400, the key level of significance that is just beyond the 64392 target. That'll be an excellent risk reward. Let's draw it for you. Let's draw it for you. Let's draw it for you. So we're giving you an idea of how we operate that allows you to make profits, to build more in your stack. Building more in your stack is the game. 851 of you. Thank you for your messages and hitting the likes and fooling the YouTube algorithm that doesn't like it when I mention words like CV19 and other things that I have a tendency to say, which points to forced medical work or anything else. In fact, we are still carrying 2 strikes on this channel against us for the phrase medical misinformation. It's very interesting because that same medical misinformation turns out to have been the best guess and the most accurate thing that was said about the entire events and saved a bunch of people's lives, many of them who have written to me to say thank you. And I'm delighted to have had such an effect. But we wear those strikes by an algorithm that punishes people that protected others from very, very severe and in certain instances death. I see fathers with daughters like me who've lost their daughters whose organs went into failure after getting the most toxic of the PFE. You know that stock, you know which company it is, Pfizer, in case you're wondering, and lost within days their child. It's very tragic and it's very sad. This is the risk reward that you would get if you did get that HVF squeeze. But if you got put in on the 160, it would be slightly different. It would be down here, a little deeper, not as sexy. You could try for the deeper dip first and monitor it if you're getting a smaller fractal of HVF windup. Or you could be in our community and see the rest of us watch that and do a lot of the thinking for you on a non-advisory basis. Let's see. Do you have any final questions for me? Yeah. Thank you. Yes, send letters to YouTube. I think everybody who ever got pulled on a medical, not just me, should have their strikes removed. But anyway, it'll be what it'll be. Build your own origami style lookup, says somebody. Sailboats are great for lots of things. Stay away from cheap steel boats. What do you think are the best silver, gold? Don't do ETFs. Don't do ETFs. Buy the metal. I know it seems more expensive. You end up holding it if you buy it. ETFs that might be cheaper and close to spot, at some point they will diverge because it's paper, it's not real, and then you bring into question the counterparty risk. The whole point of stacking is that my counterparty is how strong I am in defending this. By the way, it won't always be here. It'll be sent back. But I like to do my shoulder presses every morning and remind you what real money feels like in your hand. Your counterparty risk is I own it in my hand. That's super powerful. Holding paper with legalese that have been written for cash settlement leave you in a situation where they could determine what that cash settlement is, even though you can't buy it in the real world for anything close to that price. That's how they rape you. Legalese. This is lawfare, by the way. Of all the warfares I mentioned, lawfare is one that I should have mentioned as well. Okay, so that's how we manufacture a possible trade on gold. Similar is being done in silver and the other of the precious metals. I hope you've enjoyed today's update. You are positioned right if you're positioned in sound money. Sound money never goes out of fashion. They will hate you for it. They will resent you for it. They will resent you for calling time on their Ponzi and for maintaining your wealth when they're trying to turn you into UBI government-reliant serfs. That's when they have absolute control over you. You rely on them for the food. They want to control the food supply. They want to control everything. They want to be able to issue those that are good get what we say they may get. They want to give you your goy slop, and they want to determine what goes into it. If you want self-reliance, if you want to be in charge of your own health, your own freedom, your right of movement, it's time you became independently wealthy. You said goodbye to your host slave master and chose a friendlier, smaller nation that'll give you capital gains taxes off, for example, on your stocks, on your precious metals if you've held them for more than 2 years. All forms, trading, even crypto, everything else. You can get that if you're prepared to leave your current slave master that you were born with, you bank with, and everything. He owns you absolutely. He's about to abuse you. They are inherently predatory and abusive. Great stuff, guys. Thank you for checking in. We will continue to try and give you updates as this progresses, but it's a very good day. It's a very good resertion. It's a resumption of the key trade. Don't forget, silver. I never managed to finish the draw for you. $330, $333 is our call. You're going to go up to the fulcrum of 3 digits. You might technically run it, or you might just balk at it. I can't tell you right now. Our second interim is in the 90s. That's going to be fabulous. Suddenly, a lot of things go up a bunch in value. You know, this goes from being a $5,000 block to being a $9,000. But the dollar is not the basis of management. It's going to be a diminished dollar. It's going to be a weaker dollar. It's going to be a dollar that buys you a whole bunch less. This is why we do the things we do. And silver will outperform even gold, which will be the basis of true account when those moments start to run. Thank you for checking in. We love you. There's a link below. We appreciate you for helping us to the footsteps of 100,000. We may eventually get there. Since running in 2009, we're talking about an adventure. I was one of the earliest into YouTube. It's a long time ago for YouTube now. I'm thinking about it. Wow, when I first started and registered that channel, and we are now, what's that, 16 years. 16 years of warning and being a sound money advocate and sharing the key secrets and benefits of HVF method that can help you build wealth. Till next time, I catch you later. Thank you for watching. All the best.